Got to get the slideshow up first. Let's see. Screen share. All right, so let's see. Let me pop the chat back up where I can actually read it. Put it here. All right. Is that Jenna? You're a newbie? Glad to have you. Cheryl, first timer. Awesome. All right, so brand new to me. All right, Asif, first time with me also. Cool. All right, so I am a relatively brand new guru. I haven't even been doing this guru thing for a year. We're coming up on a year. It's been 11 months now. I've been a trader for a long time. Started trading in elementary school, doing the stock market game. I'm not a young dude. I'm losing my hair. Middle-aged, I think some people call it. And good evening, Josephine. Did I say that right? My East Tennessee accent. I am from East Tennessee. Been here all my life, 40 some odd years. So I've been trading the markets with real money since I turned old enough to do that in the US when I was 18 years old, back in the 90s. Been through two big crashes, the dot-com crash, the housing crash. I guess you'd say the COVID crash too, 3 if you want to count it that way. COVID crash was very friendly to me and my family, and a financial media company picked me up and asked me to teach what I do to other people. And that brings us here today. So now I'm teaching other people how to do what I do. All right. So anybody new? I want to welcome you. Everybody new. We are streaming live on YouTube, and we will have the recording on YouTube. And if you're not sure how to get there, it's jeffreytrader.com/YouTube. If you're watching on YouTube, make sure you like and subscribe to the content and follow me. And, because we put out more and more content, the more and more people, the better the content, the better the support I have, and the more I can provide what you're looking for. All right, so let's jump into it, shall we? Looks like it is right at 5 o'clock here. Just moments away. All right, so we're here from free market analysis, right? That's what kind of got the hook set in everybody, right? So let's jump out of the slideshow that we have here, if I can get it to go, and we'll jump into some charts. Now, start out. S&P 500. Everybody thinks it's a crash, right? Well, check this out. It's just sideways. Like, where's the crash? That's not a crash. That's sideways. And I'm using the free TradingView software, so it pops up some ads on me here. So we first touched up in this zone all the way back in May of last year. So May, June, July, August, September, October, November, December, January, February now. 9 months, right? We've just been in this big sideways. Now, what do I think is happening here? Well, this is kind of what I call corrective action, all right? We pulled down off the top. It did feel kind of crashy, especially that last day where we were down and back up 100 points on S&P 500. Now, we did a 618 retrace and stopped there. And it happened quickly. Went from January 24th right up to the 2nd, Groundhog's Day, and we hit that high. Then we dipped again and we came back up for a lower high. Big tell right there. The market was not happy, right? Like, if we were going to go higher again, we make higher highs. We don't make lower highs. So we made a lower high right there, kind of a double top action, and we started the way back down. Now, you can't really tell it on this chart. Now, where are we going, right? Everyone wants to know, where are we going? Where are we going? So let's pop up this other chart. This is what I call Elliott wave analysis. If you're unfamiliar with Elliott wave analysis, there's a plethora of information available. Elliott wave principle is the Bible, as they say, on the subject. It's by Frost and Pretcher. You can get it on Amazon. I do recommend it to all my followers. It has been life-changing for me to learn this. It's not just one of those things where you read the book and you got it. It took me 4 years of practicing this before I gained the ability to really see the twists and turns in the market. It does take some practice. It does take effort, or you can just keep coming to these free things and I'll fill you in on the stuff I see. I mean, if you want me to do the work for you, I'm here doing the work for you. So if you're the type that wants to learn it yourself, feel free to buy the book and start learning it. I'll help you along the way too. So what we have here, this over here, this ABC down right here, that was January 24th, right here. I'm kind of right now, I'm kind of the mindset that was an A wave down. That was a first move of a corrective move. All right. It was made up of subwaves on a smaller time frame. This is a 1 hour chart, in case you are wondering. It's right up there in the little bitty text up there, 1 hour. When I zoom it up. Then we had a 3-wave move back up that I'm calling a B wave. Then we had a 1, 2, and we're kind of working on the 3 right now. And we'll probably get a 4 and a 5. At least that's the way I'm looking at it right now. These are the proportions of the move that I'm seeing right now. Since this was a lower high, I kind of feel like we've set up a 1, 2, we're working on the 3 and the 4 and the 5. And where is this 5, right? Well, some possible numbers for it are looking at around this 4174 to 4090 area. And for the A and the C to be proportionally the same, the big A that bottomed on January 24th, I'm talking about, to this C wave that we're possibly working on, could support a move all the way down to this 4026 area. Now, for those who've been following me, I've had this count with this move down here for a couple weeks now. And I've been, this move up was corrective. And then we had this junk in here. And I said, I really feel strongly that we're going to see a lower low. I was kind of hoping, time wise, it would be flushed out by last Friday. Didn't happen. It just, happened. It's taken longer than I thought it would. Now, did I know Russia and Ukraine were going to get into all this stuff? And supposedly that's the reason. No, I didn't know that. The charts were telling me before any of that stuff really came to fruition. So, the price is the ultimate truth. And these predictions come from the price and the proportions of the price. And we'll get into more about that as we talk on today. So right now, where are we going? Well, I just gave you some targets. It looks like this zone down in here, though. And we can put an oval down in here. It's kind of a target zone. Somewhere down there is where that's where price support's moving to. Now, I do expect a strong reversal when we get to there. Now, something else to look at, we could come up short. We don't have to make a lower low. There is support right here, and we did touch it today on the futures. This is S&P futures. I've kind of switched over here. I had this big blue arrow. Look, we bounced right there off that line, and we came right down here to the bottom of the blue arrow. So there's something to the arrows I put on these charts. All right. Excuse me. So this support zone, where these tails were down here, I drew a support zone box, and today we found some support there. Now we can bounce off of this. This can be the end. This could be the end. We don't have to do anything lower than what we've done so far, especially when we consider the NASDAQ made a lower low over here. It did bounce off the 618, and it came right down and made a lower low overnight last night, or I guess it was yesterday sometime. I guess it was on the restart last night at 6 p.m. when futures reopened. While the rest of the market was closed, futures were going. It made a lower low, and this can be the thing that clears out. Like that can clear the market and set us up to go. So it does not have to go any lower. Just if you're like, I'm betting on it going lower, I'm really mixed right now on whether we see anything lower. I've been saying for a couple of weeks that we could see what they call a truncated fifth wave, or a truncated, move down here where we don't make a lower low. That's exactly what we got today. So this could complete the correction. Now, when I was showing you there a few minutes ago on SPX, to fill out this count, we could see a move on down, but it can be complete where it is. And price did move on down from this chart. I think I took it sometime in the middle of the afternoon when I made this chart right here. So we did push a little lower, and then we strongly reversed off of that low. We ended the day kind of right up in this zone, I think. So jumping back over to the charts. So that's kind of the general feel for the S&P 500 and for NASDAQ right now. All right. Support zone. You know, somebody was, Saint was asking before I got started here, how do you figure out support zones? You know, turn off the ads, subscribe, right? So this zone right here, where price dipped down and then was bought back up, dipped down, was bought back up, couldn't push lower, dipped down, bought back up, dipped down, bought back up. That made a support zone. And actually, it's probably that big, right to the bottom of that green candle. You can see it's almost right to the bottom of today's candle, the body of the today's candle. All right. So there's buyers stepping in right here, pushing price right back up. It happened 1 day, 2 days, 3 days, 4 days, 5 days over here. We ran up, came all the way back down, and then we've seen it 1 day so far on this trip down. Oh, excuse me. All right. Russell is in a little bit different situation though. So we had a trend line going of the lows here, and we broke through, and then we've come down to a point where we're relatively substantially equal to the bottom we saw right there. Now, I do kind of have the belief that Russell probably needs one more flush to a lower low, just like NASDAQ. This one has a different pattern going. It's not quite the same. This was corrective all the way up into this lower high right here. And to really flesh that out, I kind of got the feeling we need to see a move back down to this 1890 area. Now, that'll push IWM down. So it's something to watch. I would probably be looking for a buy, not a short. I don't think I'd try to short this because it can reverse, like I said. Russell tends to follow the beat of its own drum. It doesn't tend to follow the rest of like the S&P and NASDAQ. So that's one to keep an eye on. Now, big news on oil. And let's talk about the different oil charts that are out there, the different oils they talk about in the news. Now, oil today's had, or the last several days have had some volatile days on all this news that, you know, is making all the headlines. All right. Now, here in the US, our prices are based on what they call WTI. All right. That's the futures for it are CL. I'm looking at CL1 exclamation point on TradingView, light crude oil futures. Now, you may have heard some headlines today that crude almost hit 100. They're talking about Brent. All right. This is the European oil futures. It did come up right to about 97.40. It looks like that was the top. And you can see this chart is looking a bit different. This is European oil versus oil here in the US. Most of the time when you hear the news talking about oil prices, they're talking about CL. This is the futures for oil. Occasionally though, and you know, responsible people call it Brent, you know, Brent crude. This is the chart they're talking about. All right. So they do have a little bit different prices. It's a little bit different situation. Now, I still do believe that we're going to see $100 or at least right up into this ellipse, as the boss calls it, or ovally thing, you know, as I'm calling it. This target zone, I feel like we're going to head up into there just shy of 100. You know, this 97 to 99 area, and we may poke into 100. I have a feeling that we're going to see that sort of price sometime in the next couple months. Now, is it going to be because of what's going on now? I don't know. Is it going to be something else that we don't foresee right at the moment? Quite possibly. Yeah, another chart that's related that I don't talk about a whole lot. RBO 1 exclamation point. Is that right? Nope, didn't get it right. RBOB. 1 exclamation point. Ah, didn't get it right. Mistyped it. Man, come on. This thing's playing with me today. Gasoline is what I was trying to pull up. It's not pulling up like it does on my futures platform. RB1 exclamation point. There it goes. All right. Doesn't have the O. RB1 exclamation point. Now we are hitting the highest price in gasoline here in the US. This is US gasoline futures. These are the highest prices we've seen in years and years and years, since 2014. All right. So I've been warning, if you're not ready for this $5 and $6 gasoline, you should do what you need to do to get ready for it. Because look at this over here. We're getting into a zone where we consolidated before, and we could be in this zone again, consolidating this area. So these have been some of the highest prices. I mean, this is we're approaching the zone where we had the highest gasoline prices we've ever had. We're getting there, and this is looking pretty bullish. So we could set a new record on gasoline prices. All right. This is not just a trading thing. This is a life thing right here. I want y'all to not be surprised by high gasoline prices. All right. Now, the one I talked about last week was gold. Let's hop back down to a daily chart here. I was specifically talking about GOLD, Barrick Mining. And, you know, gold miners are a lot like Bitcoin miners in that their price of their stock responds quite bullishly when gold itself pops. So we had this nice pop right up to some support levels, and we came up shy of this 1920 over, like, I guess it was late last night when futures restarted. It popped up right to, I think it was 1918 and stopped. Couldn't break into 1920, but we still have this zone from about 1920 to 1930 of resistance. If we can see a nice pop through there, then the next zone is going to be up here around 55 to 60. It's funny, I had a conversation with Miss Carolyn Barodin earlier today, and she told me that's where her next resistance was once we clear 1920. So her and I are on the same page right now. That's what to watch right there. That 1920 area, if we start bouncing down, we'll probably return back to this trend line once again, all the way back around 1800-ish, depending on how fast we get there. This trend line is coming up off the lows that we've had starting back in August. So just connecting up these lows makes a trend line. And if we can't poke through right now, price can fall all the way back down to this 1800, 1820 area. All right. So just keep an eye on that for gold. The GOLD trade. I mean, last week we were here. What day was that? Let's see. 15th last week. So we were right here on this candle. I think most of you, if you bought into it, would have been the 16th. We're well on the way. Now, my targets for it, I'm looking out quite a ways. I'm not just looking right short term, but we need to break this 25 level. Got to break through this 25 zone right over here. And then we have targets up here for new highs around 30 to 35. Now, if we can break through that from back here all the way in 2020, break through that 31 area, then we can see some extensions. And everybody says, what kind of extensions, right? What kind of targets? Let's use this fib tool, run from the highest high right here to the lowest low right here. We can see a run out to 3660 at the minimum. And more likely, we can see a move out to nearly the 45 area. If that's assuming gold and GOLD, Barrick Mining Company, can actually get their stuff together and break on out to new higher prices. All right. Now, the question is, will oil translate to higher prices on the oil companies? That's hard to say because they're positioned in different places. Some of them are coming out better than others. I think it's Valero, VLO. Yeah, VLO. They may be in a better position than some of the others since they're a major refiner in the U.S. They may have a better position to outperform. MRO, Marathon Oil, also in a good place to break out, although it looks like they're becoming a little bit extended off this last pullback, and they may get a pullback soon. They're also coming up into the prior high over here from 2018. That's a level to watch right there. So we may get to that level and pull back. If we do that, it may be an opportune time to get in and go long there. All right. Just something to keep an eye on right there for Marathon. All right. So Jana in the chat says, take a look at COP, ConocoPhillips. Now they are performing quite well up here. Again, kind of coming up into this resistance zone where several fibs are coming together. It's kind of slowed down there for a couple weeks, almost a whole month, it looks like. Just stuck in that area. That makes sense because there's a confluence between this giant pullback and one of these and this smaller pullback in here. It creates a confluence zone and it's resistance. And it may need to pull back again before it can gather strength to bust on up through there. Now, XOM. For a lot of years, I believed in XOM, but it's been a tough road for a lot of years. You see this thing, wow. Let's jump out to a weekly chart. Yeah, see, this thing had a rough time for a lot of years here. Kind of peaked with peak oil back there in 2014. And it's had a rough time. Now, it's right back up in here now, today. And like most of the other oil companies we've pulled up here in the last few minutes, it's looking fairly bullish. So you can play it with XOM, you can play it with COP, you can play it with MRO. I like some of the lower price ones because I feel like they have more opportunity to outperform. And VLO, one reason I like it, it seems to be lagging just a little bit, but they have a large refinery footprint. So their all-time high is all the way up here around 126, currently at 85. So they've got a little room to grow here. Their peak prices were not in 2014 like XOM's. They peaked out in 2018. So, all right. David asked for AA. Let's take a look at Alcoa. Been on a nice run. Alcoa, aluminum, I think they say Russia controls 5% of the world's aluminum or something like that. So aluminum prices could be tied up into some sort of conflict. Looks like pulled back pretty big this afternoon. Let's see. Opened up higher, ran down all day. Let's see. Let's just remove the drawings here. Let me see if I can get any kind of gauge on what kind of resistance we hit. Yeah, look at that, right to the 2618. Almost to the level, and then pull back. This sucker will probably pull back to at least this 70 level. Why do I say that? Just because. And we're headed probably back into the 70 zone. That was probably the top for now. Now you can find support. It did this kind of consolidation where it kept touching the 70 level. I tried to push through, came back. Try to push through, came back. Try to push through, came almost back. Pushed on up, found a little resistance, and then made the final push up, and then right back down And I just have a feeling that we'll see a move down this 69 level. 69.70. All right. Okay. Everybody's favorite, the biggest company in the world, Apple. I see a request for that from B. Well, kind of following the way of NASDAQ, just a little bit, not quite as excited to the downside here. Didn't make a lower low like NASDAQ. Not sure I remember why I have this orange line hanging out over here. But let's check it out here. We did hit the 786 level. So we did blast on up through the 618 level, came back down right now. Let's go off the lowest low, highest high right there. We are finding support at this 618 level. Let me remove this other one. So we've moved up and did a 1, 2, 3. If we think about that as a corrective move, it'd be an ABC type move when I was talking about Elliott wave in the beginning. So just so we can see it clearly here, be an A there, a B there, and this is a C. This hit the 618 level. Now, if this is as low as it goes right here, and we start making a positive move up, which it looks like, zooming up here just a little bit, it looks like we had some positive move up here on this 30-minute chart. We need to start making some higher highs. So we got some levels here and some levels here to try to start clearing. This could lead to what I call a measured bounce entry and a takeoff to higher prices. And which time frame would I look at for the measured bounce? Well, looks like this 4-hour might be the ticket here. So the minimum entry would probably be somewhere around this 167-ish area. Confirming move as we move on up. Really confirms when it breaks above this B point right here at 173. So if we can start seeing some price action in the next day or three, that looks like this, keeps on going right here, breaks on up through here, breaks on, and just continues on up back above this high that we had right over here. Then where's going to be the target, right? What do I think the target would be off of that? Let's run this tool right here. Probably this would be a wave 1 and a wave 2 and a wave 3 would take us all the way up to around this 199.90 if this is what's happening. So, all right. This right here, this pattern can support a bullish move. Now, if we start breaking down below this 618, below 162.81, kind of blows the setup. So if we get daily closes, I'm talking about daily closes back down in this area, right in here, then we're probably not going to do it. And certainly if we go lower than 154 back here, it's going to take a whole new setup before this thing can go bullish. But right now, it has a very nice, what I call measured bounce setup to take off and go higher right here on Apple. I'm saying buy it tomorrow. No, it's got to prove it. You know, it's got to be making bullish price action before you buy it. So, all right. But that does look really good for a setup for a measured bounce, which is, I teach in my FIB class, and we'll talk more about that here in just a few minutes. I'll give you an opportunity to learn more about that. All right. Let's see. Run through. I see a request for DVN. I can pull that up real quick. We'll hit a few of them real quick here so nobody feels super left out. Well, that looks like no man's land, really. Didn't hit one of the fib lines, just kind of consolidating here at the 1618. Tried to push higher, but it didn't really get anywhere. I mean, the upside is probably this zone up here, 62 to 68, but it also can run back down and retest this consolidation zone, it did. So I don't know a whole lot about Devon and how they're positioned, but you know, it does seem they're catching some of the bullish movement in energy. So, all right. Right now, there's no great setup for going long or going short or anything on DVN. All right, I see SLV. And this thing is not like gold. It's kind of being a little bit on the crazy side. Let's see. I need to turn on Echo Trade Indicator here from a moment. Turn off some things. So it's 144 EMA. This tends to be a resistance. And right now we're testing breaking out above it, but we do have this pattern of lower highs going here. And we've got this resistance zone where we tried to make a higher high and then failed promptly back to a lower low. Now, where are this is what I'm talking about right here. Now we have a pattern of, even though this high was higher than here, it's still lower than over here. So lower high, lower high, lower high. And we got rejected a little bit today. So we're maintaining this bearish trend line. If we can break up through it, break up through this, it can get us on track to see some higher prices in silver. The big resistance zone around this 2350. We've got to break up through that zone. 2350 to 24. That really kind of starts flipping the script around to see higher prices in silver. All right. GOOG. I'll pull that up real quick. Well, they pulled back. Classic ABC type move. Proportions. I think we could maybe see Google take a dip into this zone down here. Watch for a move down there around 24 to 2,500. It's a big zone, but it's a big mover. All right. Quick thoughts on MU. Well, looks like it came up into resistance and pulling back again. May pull back to this 82 area once again. Having trouble breaking through right there. It could just be building up a little strength and go again. This green oval was where I thought it was going before. Didn't quite make it. Found resistance at the prior high from back here in early 2021. So it's a fairly strong resistance zone. Now we've done it 3 times here. We need some sort of positive news, positive price action to push this thing up so we can see some higher prices. This could lead to a big A, B, and C where we see lower prices, but right now it's got a bullish setup with a higher low. We need to see a higher high. All right. Not really sure on AA how long it would take to hit the 70 level. Marianne, sorry I didn't get your big list of requests there. I'll hit a couple of them for you. Let's see, QS. That's a bearish chart. That looks like it's going lower. Probably needs to make a lower low. Since it's kind of an IPO that took place in 2020, this probably is going to get us a lower low here before it can set up and start making some bullish action. All right. Let's see. Can we look at BTU? We take a peek. Peabody Energy. Yeah, so it's got a it's got highs right there. That's gonna have to break through to see any kind of higher prices. That is a nice bullish setup. but it needs to break and make a higher high. Say this 20, need to see something up in the 21 area on a daily close, which could get us to 25 or 33. It had a nice run off the lows going in 2020 and 2021. This consolidation here. And this could be a final move for now. So watch out. Like if we get this push up in here, it could see a deeper correction. So, all right. I've done the 30 minutes that I promised here. So you give me just a minute and we'll wrap this thing up here today. So how would you like an all-in-one crash course on the type of trading that I do? The lines I trade with are all based on Fibonacci. I mean, you saw me draw fibs here and there all evening. That tool I kept throwing up lines with, it's called Fibonacci. And it's powerful market math. It predicts where trends are going to end up, where reversals are going to happen. I use it all the time, every day, hundreds or even thousands of times a day. I'm using these tools. And when I learned to trade with Fibonacci, it transformed my trading career. I mean, for years, I thought I just need to learn more about the markets to really understand what's happening out there. And I have a lot of junk knowledge about the markets stored up in this noggin up here that doesn't necessarily help me make any kind of money. Now, when I learned Fibonacci, that really changed things. I mean, it changed things drastically. And my whole trading success story would not have even been possible without the power of Fibonacci. In the past, I've taught a fib class for $97. That's what we charged for all of the fib classes we've done so far. But now, for the first time ever, you can get the recordings of all those classes and a lot more for just $47. Forecasting with Fibonacci, we're going to give you a Fibonacci trading workbook, a 90-minute fib masterclass, the Fibonacci tool. It's an indicator that I created that works in TradingView. You'll get every fib class that I've ever recorded in the past and a whole lot more than that 90-minute class. I mean, I think we have 3 of them in the members area right now that I've done in the past. You'll get the proprietary fib tool, and you can add it right to your charts. You get a brand new Fibonacci trading workbook. We just finished this thing today. I mean, it's brand new. Outside of a few people in the company, nobody's even seen this yet. So you get this stuff, plus you get access to a members area. We're actually going to give you a members area on the website. You get access to Discord, where we have a Fibonacci channel, and you get access to chat with me in the main channels that we have in Discord. I throw in trades all the time into Discord, into the free areas, and you'll get all those free areas plus the Fibonacci channel. So even if you've joined me for a fib class before, I highly recommend joining this program because you get to claim all the new bonuses. So go to jeffreytrader.com/fib or call 855-454-0816 to speak with a member of my team and order today. All right. Any questions? I do not use NinjaTrader. I did for a special class way back in the summer, but I do not currently use NinjaTrader. Everything I've got can be done in NinjaTrader quite easily. Now, I do use what I call the measured bounce setup. It's a Fibonacci setup, and here were the results today using that kind of setup. These are all futures trades I placed today using that setup. That's 17 trades. Looks like 14 wins, 3 losses. Total profit $334. All micro contracts with like a $30 margin required. So, all right. I've not talked to Bart at TGO. No. He's in the lifetime chat. I've seen him in there. I haven't talked to him directly. All right. I appreciate you guys. So jeffreytrader.com/fib, 855-454-0816. All right. I'm not the only game in town. I just I've put together a series of tools and teach you what I know about it. Like I said, we've got 3 classes that I've already recorded and done. We've got the Fibonacci tool, and then we've got the workbook, which is a brand new edition. All right. Thanks everybody for joining me. We'll be back next week. If you're not in any of my services, if you are, come talk to me in Discord. We got stuff going on all day, every day. So appreciate everybody coming out today. We'll wrap this up. Thanks for watching. Like and subscribe if you're watching on YouTube.